Hello traders, welcome back. In this video, I'm going to show you some cool indicators for the ICT Silver Bullet strategy. When you're trading, it's important to have a clear system with simple rules. That way, your emotions won't mess with your decisions, and you'll know exactly what you're doing. People usually say using indicators in ICT trades is a no-no, but the ones I'll show you are just tools that draw stuff automatically and represent the strategy. The main indicator, the most important one, shows this thing called the ICT Silver Bullet time box. The second one points out the highest and lowest points in a smaller structure, helping us figure out if the trend is gonna keep going or change. The third one gives a bigger picture of what's happening in the market, cutting out the noise. For our backtest, we're looking at the Euro vs USD on a 1-minute chart. I didn't include a fair value gap (FVG) indicator because it's better to add that after the market changes. Just be patient and wait for the silver bullet time window to start. If there's an upward trend, we're on the lookout for two things: the trend continuing or flipping. Only after that, we start looking for a fair value gap to make a trade. When the price breaks the highs and leaves a fair value gap, it's a good sign. The price jumps up after touching it. But as the price keeps going up, the next fair value gaps become riskier. Unfortunately, the price drops below the zone. If you already made a good trade in the first few minutes of the time box, my advice is to close the chart and come back tomorrow. This is just a backtest, so I'm checking out almost all the fair value gaps that happen in the time box. The price messes with the liquidity and creates a clear imbalance, giving you another chance to make a buy. In this time box, 3 out of 4 fair value gaps look like they could lead to a winning trade. Let's move forward to the next day. We turn on our handy indicator to spot the market structure and hunt for fair value gaps, ideal for trading. We wait for confirmation from the market structure. The price dipped, leaving behind an imbalance and a fair value gap. We enter this zone, but the price initially falls, creating a pullback. Soon, another imbalance emerges, leading to a profitable trade with a high risk-reward ratio. Again, the price dips, creating another imbalance and fair value gap. This trade also turns out successful, with a high risk-reward. The fourth imbalance is smaller and occurs right after the third. The fifth imbalance resembles the third, with the price breaking low and leaving a notable fair value gap. This entry could lead to a trade with a huge risk-to-reward ratio until the end of the time box. Interestingly, 3 out of 5 imbalances were highly profitable.
Recommended broker is Longhorn FX. Trade a wide variety of assets with leverage up to 1 to 500. How to sign up? It's as simple as entering a few sign-up details and creating a password. Be ready to receive a welcome email where you can later verify your account. To secure your account, it's recommended an extra step of verification, even by call or text message.
Next, we switch to the New York Silver Bullet time box of the following day. We observe a textbook example of trend change, with the price sweeping liquidity just before the time box and breaking the last lower high. This action leaves a massive imbalance zone, perfect for a buy trade. The price then pulls back to the edge of the imbalance zone and strongly rebounds. The second momentum breaks the last high, creating another significant imbalance. This presents another chance to join the trend, occurring within the silver bullet time frame. The market shows a strong bullish impulse, and both trades offer very high risk-to-reward ratios. Now let's examine our final, more complex case. Don't miss this one. The silver bullet time window starts. The price is intriguingly positioned between minor and major liquidity levels. It breaks the last low, leaving 2 imbalance zones. The price activates the second one, heading towards the major low. This could have been a very profitable trade, entering at the imbalance zone or the fair value gap. The price sweeps the major sell-side liquidity, breaking the mini trend structure. During this reversal, 2 imbalance zones are created. The price taps into the second one and rebounds, offering another potential profitable trade. For setting the take profit level, we can use significant points like resistance or a supply zone. Thanks for watching the video to the end. Remember to comment with the word indicator and message us on Instagram to receive all of them for free.